This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Today's podcast is brought to you by Leverage, a new fully featured decentralized futures exchange without compromise. Are you ready to trade the future of crypto today? Well, Leverage is a DEX, so you can trade with your keys and sign orders just with one click, and Leverage is fast. Yes, indeed, Leverage is powered by Gluon, a new layer 2 solution with the scalability and speed of a centralized exchange and the super low fees of a DEX. Yes, Leverage, the new exchange that combines the best features of CeFi and DeFi, so you can trade crypto spot or crypto derivatives with up to 100x leverage while maintaining control of your assets at all times. It's like William Gibson said, the future is already here, but in this case, it's evenly distributed and completely decentralized. Go to leverage.io, and leverage is spelled Leverj.io, and trade the future of crypto today.
Yeah, boy!
My guest today is one of my favorite returning guests here on the Crypto Conversation. Very excited to have Mr. Rekt Capital back on the show. Rekt is a crypto analyst and trader from Europe, I believe, but he's pseudo-anonymous. But hey, welcome back to the show, Mr. Rekt Capital. How are we doing?
Awesome to be back, Andy. Thank you so much for having me. I'm doing great. The market might be a bit iffy at the moment, but it's always great to be back here talking to you.
Excellent. Well, great to have you back on the show. And yeah, I mean, the market is a funny one at the moment, right? 2 days ago, we were sort of deep in the Bitcoin correction. And then around yesterday, we had quite a good bounce back up, and we even touched 50K again. But, now we're back down to around 47 or so as we record. So, yeah, well, I think we need to dive into this. Love to get your thoughts. So what do you see happening with Bitcoin at the moment?
Well, like you said, we are in a bit of a corrective period right now. Of course, we saw that strong bounce yesterday, but today we're kind of retracing 50% of that bounce already. So in the macro scale, it was a 26% pullback, and the reason I say it's a pullback and not a correction is because it's very difficult to now try to label what's exactly going on in Bitcoin's price action, because bull market corrections are totally healthy. They are normal price action, a small pause before further upside in a healthy growth cycle. So this pullback isn't quite yet a Bitcoin bull market correction. Bitcoin bull market corrections tend to be 30 to 40% deep, whereas now we're seeing a 26% pullback. And of course, in 2017, for instance, we saw 5 to 6 major Bitcoin bull market corrections, 30 to 40% deep. But we also saw in 2017 12 dips of minus 10 to minus 25%. And the reason I mention this, Andy, is because we're now seeing a 26% pullback, and it really is on the cusp of dip territory, especially since we really bounced up quite nicely most recently. So we essentially had some downside volatility to the minus 26% mark, and then really bounced towards the upside. So at the moment, it's still not confirmed to be the end of the correction. I feel like we're still very much in that corrective period, because if we just look at, because we're talking about the depth of this pullback, but it's also important to look at how long in terms of time this pullback lasts. So far, it's been about it's been a nine-day pullback, roughly speaking. And the average pullback, or at least correction, in a bull market in 2017 is 16 days. So now we're 9 days in the midst of a pullback, minus 26%. it's still very much out there. It could easily still be continuation in the pullback. We might be going a bit deeper. So this recent rebound could very easily be one of relief, because we've had, out of the 9 days that we've seen this pullback actually transpire, out of those 9 days, we've only had one small green candle and yesterday's very strong green candle. So 2 green candles in the space of 9 days, that's a whole week of sell side pressure. So when we see corrective price action like that, we're going to see a lot of selling, and we saw a lot of selling. It's just that you can't see this sell side momentum persist for extended periods of time. You have to have that sell side exhaustion. Sellers just don't know what to sell anymore. They just get tired of selling, and then buyers step in for a brief while just to rebound towards the upside. And this is where the market experiences that relief. They're like, after all that panic, all that extreme fear of a bear market coming along or whatever, we now saw some relief. Those bear market calls are out of the window. So now we're kind of post relief, but people are feeling a little bit better about the correction. But we're still very much in this pullback territory, and this relief rally is part of that process. So let's see what happens. The most important thing right now is to just watch out for that lower high relative to the 58,000 highs, because when we see corrective periods, we tend to see a strong pullback and then a strong rebound relief rally, which precedes further continuation in the downtrend. So this is healthy, normal pulling back price action in a Bitcoin bull market. So no need to jump to the conclusion that we're in a bear market or anything. It's just normal price action in an otherwise natural, healthy growth cycle. So let's see how this pullback continues. We had one last January, minus 31%, which lasted about 2 weeks. So we're now having a minus 26% pullback, which is lasting around 9 days. So it seems like the sentiment on crypto Twitter, people are panicking more about this minus 26% in 9 days pullback more than they were panicking in January when we saw a retrace of minus 31% in 2 weeks. So nothing to be worried about at the moment.
Yeah, I think that is a very sensible summary of what is happening. And I think, yeah, there certainly was some doom and gloom that I could feel on crypto Twitter. And if I'm honest, I could feel it within myself, a few days ago. But I just think that, if you look at things rationally, as you've sort of hinted at, it is really good for the market if these sellers do come on and they're offloading what they want to sell, and eventually you reach a point where those sellers exhaust the supply that they're prepared to dump onto the market. And I think one of the key differences, if we look at previous bull markets, of course, now you've got perhaps what we would call longer term players with stronger hands, whether that's institutions or hedge funds or the likes of Michael Saylor and MicroStrategy, or even Tesla and Elon Musk. It doesn't really matter. But if those people are whether they're buying the dips or just allocating capital and buying up the supply, it doesn't really matter, as long as those people do have perhaps a more longer term view of the market than short term traders. Then that is all going to be positive for Bitcoin's bull run to continue, right?
Absolutely. I mean, there's always an element of institutional interest in Bitcoin bull markets, very similar to, we have the whole hype of Elon Musk buying Bitcoin and being interested in Dogecoin, and Tesla wanting to have Bitcoin on their balance sheet, and more companies generally just getting a bit more warmed up to that sort of approach. That's the sort of institutional interest that we're seeing now in this cycle. But in 2017, we had the whole narrative of a Bitcoin ETF. And we had the CME and all these different things. So we always have an element of that institutional interest, and it always takes different guises across these different cycles. So there's always going to be an element of that in a Bitcoin bull market. But for me as a technical analyst, I tend to see it's very, when you look at the chart, you see these sort of market structures develop before time, before any of these catalysts, these fundamental catalysts come into play. And then it's just these announcements that suddenly prompt a breakout, which the technical price action was kind of foreshadowing already. So it is a bit of a kooky way to look at it, but somehow, you know, TA and FA catalysts, they are two sides of the same coin. And for some reason, we always see these catalysts come at the same time when technical analysis is also showcasing something very promising.
Yeah, that's interesting. And I think, you know, what you're talking about is, you know, so there's one way of looking at the charts from a purely technical approach, which is certainly part of what you do. And then I know you're really interested in also the psychology of the narratives that are impacting the price action. And another way of talking about that is the stories we tell each other about what we think is going in the market. Sometimes those narratives are true and sometimes they're not. And another factor that's in play here is the psychology around numbers, right? So, for example, love to hear, you know, your thoughts on whether 50K plays into this, because we did see this bounce up to 50K yesterday and boom, immediate sell pressure.
Yeah, that's right. Psychological numbers are always going to be the ones to look at. It's these psychological resistances, whether it's around number 50K or 20K, they exist because we humans, we like to resort to mental shortcuts, which are otherwise known as, cognitive psychologists refer to these as heuristics. And these mental shortcuts are essentially exactly that, mental shortcuts that our brain takes to speed up a decision, especially if that decision is a bit complex or we have a bit of indecision or hesitancy with making that decision. So to place a buy order or a sell order at 50,000 is so much easier for us than to place a buy order with a very specific number of $49,784,000. So it's a very easy, cognitively efficient and fluent process for us to place these orders at round psychological numbers, because at the end of the day, our brain loves cognitive fluidity. And we see this cognitive fluidity in many different contexts, but in this specific context of just placing buy orders and sell orders at psychological round numbers, it totally makes sense why people would do that. And seeing as the market is an emotional place, many people come up with that idea. And you're right, Andy, 50,000 does look like a resistance at the moment. We'll see how things continue from there. Not all psychological numbers will be strong supports. For instance, we had a rejection. I think, in fact, if I'm looking at the charts, and if we see the January correction this year, 31%, that actually started after a rejection from $40,000, another psychological round number. So it's interesting that we rejected this time around from 58,000. I mean, it wasn't quite 60,000, which is a bit surprising there. But we're already seeing that 50,000 is a psychological resistance, much like 40,000 was. But the interesting thing here is that previous areas of sell-side pressure, so resistances, places where we see price reject, like 40,000 or 50,000 most recently, they should technically become new areas of buy-side pressure, because essentially that's how the market turns, where we see them selling at that area, and then when price breaches that area, they're suddenly convinced to buy at that area. But at the moment, or at least when we're looking at 40,000, we saw price reject from there, but we didn't see price turn into a support there. And when looking at 50,000, we've recently rejected from 50,000 resistance, but 50,000 wasn't really a strong support either. It hasn't really been tested as one. So it's interesting to see how these psychological round numbers are very key players when it comes to selling momentum, but not necessarily buy-side pressure. It looks like people, the buy-side pressure, most of it tends to happen at very strange numbers. For instance, the January minus 31% retrace. The bottom was 28,786,000, or the recent bottom on this, the local bottom, at least on this recent 26% pullback, was 43,000. So that's more of a round number. But it's interesting how these round numbers seem to be more of a factor in playing a role as a resistance rather than as a form of demand.
Yeah, that is exactly right, Mr. Rekt. And what's also interesting here, it reminds me of what Michael Saylor has been doing, right? And so I don't have his tweets or how they correspond to the price action right in front of me, but I think, you know, he's quite strategic and cunning sometimes in the way that he and MicroStrategy announce their buys. And I think from memory, when Bitcoin was first approaching the old all-time high of 2017, just under 20K, right? I think, you know, he was quite strategic in announcing the buys to almost kind of front run that price action and give traders the reason to buy and be part of that momentum to push past those psychological resistances, it's quite a clever way of, I don't want to say manipulating the market, but it's just another psychological ploy, eh?
This is an interesting insight because even with Elon Musk, when we saw the January minus 31% correction, Elon Musk ended that correction pretty much. It seems like Bitcoin's price action just reversed after he announced the whole the Tesla news. So I actually posted a tweet during that time. Did Elon Musk just end the Bitcoin correction? Because it was absolutely true. And these sort of players, I mean, Elon Musk has 2.5 million followers on Twitter, and he put his in his bio he put the Bitcoin hashtag, and these sort of players do have influence for sure, social media influence, and also on the market, especially when it comes to such major announcements like the Tesla news. So definitely there is some impact there, but even when the Elon Musk news occurred, we saw the correction end, but that rally was very transient. We saw a lot of that rally become cancelled out, and then we saw a bit of consolidation before actually continuing towards the upside. So although there is an effect on the market, sometimes depending on the market cycle that we're in, because in this market cycle, in this phase of the market cycle where we're in a clear bull market, then this will, of course, these sort of announcements will proceed further upside. Even though we might see some volatility in the meantime, we'll see further upside. But in the thick of, or at least I think this was a year ago or 2 years now, I can't remember, the Chinese president openly endorsed blockchain. I can't remember exactly when this was, but this led to a 40+% rally. But then that rally started to dissipate, and then we actually saw new lows in the weeks afterwards. So it does really depend on the context, the market cycle, and the macro context of Bitcoin's price action when this announcement will, when this sort of announcement will occur. Because in a bull market, yes, the price will go up in the short term, and then it will probably go up in the midterm as well. In a bear market, when such an announcement occurs, we'll see in the short term a pump. But, you know, that situation when the Chinese president announced that, publicly endorsing blockchain, and then we saw a lot of that rally, actually the entirety of it, retrace in the weeks afterwards, it just showcases how context, macro context, is very important.
Yeah, exactly right. And, there's a good example of a buy the rumor or a buy the news announcement immediately, and then sell into the hype after that happens. But yeah, look, let's just finish off on Bitcoin, and then we'll move into altcoins, Mr. Rekt Capital, because I think a lot of listeners and a lot of your followers in particular will be interested in your thoughts on the alt cycle. So let's just finish off with some macro Bitcoin thoughts, then where are we in, I guess, Bitcoin's market cycle? Are we confident that the bull run will continue and that this is just a dip or a correction? There will obviously be many more dips and corrections as we go forward. But yeah, so closing thoughts on Bitcoin before we get into altcoins.
Well, when it comes to Bitcoin's price action and its positioning in the overall macro context, you can think about many different forms of analysis, and one of those forms of analysis can be the the Bitcoin 4-year cycle, or you could look at the stock to flow model as a different, more data science model to look at where we are in the market cycle for Bitcoin. But you can also look at the Bitcoin halving and the curious role of the Bitcoin halving when it comes to Bitcoin bottoming a certain amount of days before the halving and then Bitcoin potentially peaking a certain amount of days after the halving. This is something I was talking about in the Rekt Capital newsletter, where so the basic premise here, just to explain it, is that we have 3 halvings in history. And when we consider Bitcoin halving number 1, it occurred in November 2012. And 380 days before the halving is when Bitcoin bottomed. And then 364 days after the halving is when Bitcoin peaked. So it's a very interesting mirroring effect where you see Bitcoin bottom before the halving a similar amount of days to the amount of days that it takes for Bitcoin to top out after the halving. So that's Bitcoin halving number 1. With Bitcoin halving number 2, you saw Bitcoin bottom around 540 days before Bitcoin halving number 2. And then it peaked 518 days after the halving. 540 versus 520, very similar amount of days. This is a very curious roll of time for Bitcoin. So if we were to see the Bitcoin halving event acting as a mirror in terms of, the Bitcoin bottom and the Bitcoin top, in terms of the same amount of days being on either sides of the halving event, if this continues, here's what could potentially happen. Because Bitcoin prior to halving 3 bottomed around 511 days before the halving. So if we see this mirror effect happen, we could see Bitcoin bottom 511 days after the May 2020 halving, which would essentially mean that Bitcoin could top out in Q4 around October. And this is interesting to me because we have a lot of confluence with the Bitcoin 4-year cycle, because the Bitcoin 4-year cycle is essentially showcasing to us that in the candle, so essentially the 4-year cycle, each candle represents 1 year. And the biggest explosive growth that we see in Bitcoin's price action is in the candle, the yearly candle after the yearly candle that has the halving in it. So essentially speaking, the Bitcoin halving was in candle 4 to finish up the previous 4-year cycle, and now we're in the very first candle of the new Bitcoin 4-year cycle, and we tend to see exponential growth in the several months after the halving. And essentially, every candle 1 in each of these 4-year cycles to date, and we've had 2 so far, this is the 3rd one that we're currently enjoying, in every 4-year cycle to date, candle 1 has peaked at a certain price and closed at some many dollars below that peak price. So essentially, we peak much sooner than we see the new year come in, right? So that's quite interesting, because if the mirroring effect of the Bitcoin halving continues this way and we see a peak in October, for instance, or Q4, that means we'll see the peak then, but we'll only retrace a little bit by December 31st. So though a peak might have happened earlier, we'll still retain most of those gains, but we will retrace a little bit. So there's a bit of confluence between the curious roll of time in the context of the halving and the 4-year cycle. And of course, you could tie this in with the stock to flow and other data science models. But it seems like it's a bit premature to say that we're ending the bull market right now, especially when we're only in March right now and the new Bitcoin 4-year cycle has only just started. We're only in the third month of the new Bitcoin 4-year cycle in candle 1, and candle 1 hasn't really taken off yet. So I feel like it's quite premature to talk about the end of the bull market, especially when we've only seen one Bitcoin bull market correction of minus 31%. We tend to see 5 to 6 Bitcoin bull market corrections. So we saw one. Could we be seeing another one right now? It's still, the jury's still out because it's only 26%, so theoretically a dip. But the fact that we're seeing a second potential correction means that we're still early on in the cycle because there are many more corrections to come.
Yeah, great stuff. I tend to agree, and I think most listeners will tend to agree, and they'll be pleased to hear you say that, yeah, it's perhaps too premature to call an end to the Bitcoin bull market. And yeah, I think you're exactly right. You know, your analysis of the curious role, I think you call it the curious role that the halving plays with Bitcoin's 4-year cycle, and you know, the famous stock to flow analysis as another way of looking at essentially the same price action. And you know, talking of stock to flow, it just reminded me, I saw, you know, because most people will be aware of who Plan B is, and if you're on Twitter, you'll no doubt follow him. But just last night, it was quite interesting because, you know, he always posts whenever a new orange dot is generated on his stock to flow chart, and he posts that, and he always says something like, you know, like clockwork, the price is still tracking to the model. But someone asked him last night what that stock to flow chart would look like on a linear scale, and so he actually posted the stock to flow cross asset model S2FX as a linear chart. So if you're interested, just go to his Twitter and you can see it. But it looks absolutely ridiculous because you see the price action is just sort of on one steady line from, you know, Bitcoin's beginning 2010 just to today 2021, and then it just nudges up slightly you know, next year or this year 2021, and then it just goes ballistic at 2025. And again, it just reminds me that is, you know, a function of effectively Bitcoin's exponential growth. And, you know, you and I may have talked about this before. I've talked about it with Mark Yusko, certainly on this podcast, that Bitcoin's price, it does increase exponentially. And if you look at the past gains, it doesn't really make sense to see that Bitcoin has its price has increased, you know, whatever it is, over 10,000% over 10 years, and humans just aren't wired to understand the power of exponential growth.
Yeah, that's right. That's right. We definitely prefer to think in terms of linearity. We don't do very well with big numbers, especially compounding numbers as well. So while we see these exponential price appreciation, it's very important to know that, as with any cycle, any market, Bitcoin also cycles from extreme fear, which we saw in March 2020, for instance, when Bitcoin's price was in the 3,000 region. We cycle from extreme fear all the way to extreme greed, where Bitcoin will peak, whether that's later this year or whenever. But we always see these cycles from fear to greed to fear. And we will see bull markets, we will see bear markets, but ultimately Bitcoin's price will go up over time. Depends on what your time horizon is, but if it's 10 years or whatever, then I think we're in pretty good hands.
All right, well, very interesting thoughts, Mr. Rekt Capital. Let's close off this part of the conversation and move on to altcoins. And I guess just before we do that, I want to give a shout out to your crypto trading course, because I remember, you know, when we did our first podcast together, you came on the show and we did we ran a little promotion where listeners to the Crypto Conversation could get a discount to your crypto trading course. And since we've since established a relationship, and you've written some great analysis articles for bravenewcoin.com as well, and so we've put up a little ad on those articles just to promote your course, because it is it's a good skill to have. And there are a number of people, or there's a lot of people, as they start getting interested in crypto, inevitably a lot of people they want to learn how to trade. And some people, they can do that by looking at what Josh does on Brave New Coin. He is a fantastic trader as well. But talk about your crypto trading course, and if people are interested, they can simply go to any of the Rekt Capital articles on Brave New Coin, and you'll see a little ad at the bottom of that article, and just follow that link. And even if you use the code Crypto Conversation, I believe you get a $20 discount on the course, which is great. But just talk us through the content of that course. What are you offering, and why should people potentially take a look?
Absolutely. I mean, we're in an exciting time in the crypto market, and it's really a time to make the most of it, because we know that crypto and Bitcoin fluctuate, and Bitcoin behaves in cycles. And this goes for altcoins as well. We cycle from fear to greed and greed to fear. And the last time we saw a Bitcoin bull market was in 2017. So for people who've been there, done that, it's been 3 long years for us to finally be back in the bull market, enjoying it. And it really is an opportunity that comes around every few years. So to really make the most of a Bitcoin bull market, you really have to be prepared. And it's very important to just learn these skills, potentially life-changing skills, for me at least, because when I first created this course, I essentially mapped out the journey that I took in terms of learning technical analysis, learning about these different metrics and indicators that can give you an edge in the market, whether that's technical indicators, or whether that's psychological insights. These are all things that are worth learning about for us to gain an edge in the market, but also for us to be level-headed about how we approach the price action, because it's very interesting, or at least very easy to talk about Bitcoin. It's going to go up, it's going to moon, and we're never going to see a red day ever. And altcoins are going to be in a perpetual alt season. But it's very important to always remain level-headed, always look at the price action and look at it as if you're a weatherman. What could potentially happen? What could the price action do based on what we're seeing in the candlesticks, or whether what we're seeing in the RSI, or what we're seeing in the volume? What's the psychological story in the volume? Because after all, the price action on the chart is a historical transcript of fear and greed, and it's all about tapping into that investor sentiment in graphic form to just try and absorb what's actually happening with a level-headed approach for us to be able to navigate the market much more effectively. And my technical analysis course gives you the skill set to really be able to do that, for you to make the most of an opportunity that comes around once every few years. And it's it's the educational resource that I'm probably most proud of.
And so just tell me how that works, because is it based on video content? Is that right?
Yeah, that's right. So you have 17 hours worth of video tutorials. Each tutorial, so I believe there are 10 tutorials. Each tutorial has a corresponding webinar, which I hosted for students, early bird students, and every tutorial is a really great introduction into what we're covering. But in those webinars is where students ask a variety of different questions, and we build in depth on top of what we've already covered in the tutorial. So it's a great learning experience to not only glean the frequently asked questions that students had about those tutorials, but to also build upon those. And also in these webinars, I also showcase practical examples of how you can apply things covered in the tutorials.
Fantastic. Well, as I say, so if you're interested in learning more about that course or getting involved, just go to one of Rekt Capital's articles on Brave New Coin. Just search Rekt Capital on Brave New Coin, and you'll get there. And then there's a nice promo ad at the bottom of those articles. And yeah, use the code Crypto Conversation for a $20 discount. Very good stuff. All right, well, let's talk altcoins, Mr. Rekt Capital. I wonder where we should start here. So I know you've got some really interesting ways at looking at the altcoin market, if you like. So there's individual altcoins, there's altcoin money flow, and there's the altcoin market cap, which is the market capitalization of all altcoins, excluding Bitcoin, right? And I think, correct me if I'm wrong, talk to me. So, you've talked about how this broke its all-time high in terms of market capitalization recently. And so what does that mean?
So the altcoin market cap has broken its 2017 highs. So that's essentially the final level of sell-side pressure that we tend to see in the altcoin market cap. And like you mentioned, Andy, it's an aggregate of all different altcoins meshed together. It's a really great metric, but we tend to see the psychology in the price action of these individual altcoins. We see the same psychology in the altcoin market cap. So a very good example of this is that Ethereum USD is forming a U-shaped, macro U-shaped reversal. If you look at the monthly chart for Bitcoin, or at least Ethereum's price action, you'll see a massive U shape. And if you look at Cardano's price action to the US dollar on the monthly time frame, you'll also see a massive U shape. And the same thing goes for altcoin market cap. If you look at the weekly time frame for altcoin market cap, you'll also see a massive U shape. And it's really interesting because all these three assets, and there are more, all of these three are very strongly correlated to one another. So it's interesting because this is a illustration of psychology. So when we think about Ethereum, for instance, it is the market leader for a wide variety of altcoins. It is a large cap, so it has a substantial amount of market cap to it. So whenever Ethereum moves, altcoin market cap will feel it. Altcoin market cap will see a jump. When you compare it to, for instance, a small cap rallying, you won't really see a small cap impact the altcoin market cap. So it's interesting because Ethereum is actually leading altcoins as the market leader, as a large cap, as number 2 in crypto on the market cap charts. So Ethereum is leading and altcoin market cap is lagging. But in the parallel universe, you're also seeing Cardano lagging, or at least a few weeks ago when I started talking about this on the Rekt Capital newsletter, Cardano was many, many steps behind Ethereum. We were seeing a U shape, but it was many, many steps behind Ethereum and altcoin market cap. Only in recent times, only in recent weeks, we started to see that U shape really complete for Cardano. And lo and behold, that was very possibly caused by the catalyst, the Mary hard fork, which occurred most recently. So you always see something I was talking about earlier on in today's episode is that we saw the U shape forming in Cardano's price action, but then you had that catalyst in the Mary hard fork, which really propelled Cardano to really resynchronize with Ethereum. So interesting to just see these sort of things recurring across different assets as well as the altcoin market cap. And the interesting thing about that, Andy, is because Ethereum has broken out from its U-shape macro reversal and is now testing the final resistance as a new support potentially. So the way to think about it is if we look at Ethereum or Cardano or the altcoin market cap, it's a massive U. And the top of that U-shape is the final resistance. And to fully confirm a breakout from such a macro formation is to break that resistance, pull back to turn it into a new base of demand for it to springboard into further all-time highs and price discovery. So that's essentially what's happening with Ethereum. That's essentially what's happening with Cardano, and altcoin market cap is in a position where it's currently retesting its old all-time highs, its old 2017 highs, which is a historic event. Because the last time we saw altcoin market cap test its previous resistance as a new support was, so we had in 2014, we saw the 2014 highs reject altcoin market cap. Then we saw an over 1,000 day pullback. It took over 1,000 days for altcoin market cap to get back to those 2014 highs and break them and then test them as a support. And once we tested the altcoin market cap, once it tested those 2014 old all-time highs as a new support, altcoin market cap grew by 27,000% in 390 days. So it's a historic moment for altcoins because the altcoin market cap is an aggregate of all these different altcoins. And we have a lot of those altcoins in the space by now, a few thousand. So the fact that altcoin market cap is on the cusp of turning 2017 highs into a new support means that we could see altcoin market cap increase exponentially. And you know, there's no point to say that we're going to see history repeat exactly, that we're going to see a 27,000% rally towards the upside, that altcoin market cap is going to grow that much, because to be perfectly honest, once we break and successfully retest those 2017 highs as new support and altcoin market cap springboards, it's going to be, there will be no top, theoretically, for altcoin market cap. Altcoin market cap will be spending its next weeks and months trying to find a top where it could peak and reject from. But that's going to be a long process. And the last time we saw the old 2014 highs turn into a new support, it took 390 days, over a year, for altcoin market cap to finally peak in late 2017. So if altcoin market cap is now in the process of turning those old 2017 highs into a new support, it could be the case that altcoin market cap could be rallying for a year. And that's a very exciting prospect to think about, because it does also tie in with all these different, with the 4-year cycle at least, where we'll probably see a Bitcoin peak before altcoins peak. So altcoins are going to be lagging in terms of increasing in valuation, even though that Bitcoin may have started its bear market many months ahead. So really interesting, really exciting. Altcoin market cap is on the cusp of a very historic moment.
Wow. Does sound exciting indeed. And I mean, you're right. It is folly to say that history will repeat. And, you know, it's insane. I think you said that, you know, in 2017, the altcoin market cap increased by 27,000%, which is just an insane number. And again, it's, you know, it's that exponential gain that, you know, we're not really wired to understand what that means, and the incredible opportunities that are available if that kind of price action does repeat. But if you kind of take a step back and, you know, if that's what happened in 2017, and obviously some of those altcoins were very illiquid and small, and so it doesn't take much capital to move some of those coins around. But, you know, here we are again, and, you know, you only need to look at metrics like, you know, Binance signups and Coinbase signups have been, you know, exceeding even the end of 2017 numbers, and there's just a much increased number of on-ramps into crypto now. So, you know, from that respect, I guess there's no reason to think that something like that couldn't happen again, because it does come back to one of your favorite subjects, which is really, you know, human psychology. And as much as, you know, I guess there's a certain segment of the market, maybe Bitcoin maximalists, you know, they don't see another altcoin boom happening in the same way. But for good or bad, humans are humans, and greed is greed, and number go up means number go up, and liquidity begets liquidity, and it's just kind of, that's how the market works, isn't it?
Yeah, a number go up, definitely. I mean, history doesn't always repeat itself, but it sometimes rhymes. But the most important thing to take away from this, and this is something you alluded to, Andy, is that man does. History doesn't repeat, but man does. And it's just interesting how we have as humans, we have a cyclical psychology. I mean, in 2018, nobody was thinking about buying Bitcoin, and it was the end of Bitcoin. Bitcoin died, as many people like to proclaim. And here we are again, many times, so many tens of dollars above the old all-time high of $20,000. So sentiment does really change, interest does change, and like you said, we're seeing more on-ramps, exchange user signups. But the altcoins, the cryptocurrencies themselves, are being used as well. There are more wallets being created for these cryptocurrencies. There are more economical transactions occurring. So it is really an exciting time. There is user adoption as well as mainstream interest coming into crypto. And the altcoin market cap is a testament to that. It really reflects that newfound interest.
Yes, indeed. And well, look, it has been interesting to look at Ethereum because, you talk about this U-shaped price action, right? And Ethereum has hit that all-time high just over 2,000, but has kind of struggled to regain it. And you mentioned Cardano, which has really taken off and performed extremely well over the last few weeks. And I guess part of the reason for that is this, if we talk about, narratives, Ethereum has been slightly saddled with, just too much users for the system, leading to really high gas fees. So perhaps there's an argument to be made that some traders have decided to look elsewhere. And that would be one of the factors behind Cardano's really strong price appreciation, perhaps. But well, let's talk about some other altcoins then, Rekt. Any other specific altcoins that you're watching at the moment? Who do you think could be some next of the bigger movers?
So it's interesting, Andy, that you mentioned Cardano and Ethereum, and it goes back to what we've been talking about in terms of altcoin correlations, where Ethereum is leading the market. Altcoin market cap is lagging behind Ethereum, but still following it. And Cardano lagging behind it considerably a few weeks back. And now it's resynchronized quite nicely because of that narrative and because of the catalyst and whatnot. And if we're to go down the same rabbit hole of altcoin correlations and the macro U-shaped formation, Litecoin is another one that's seriously lagging behind Ethereum's U-shaped formation. And if you just look at these U-shaped formations, you're seeing that Cardano has resynchronized with Ethereum, and altcoin market cap has caught up to Ethereum, and Litecoin is painting the same exact formation, but hasn't fully caught up. And it's just a testament to how Litecoin is severely lagging behind Ethereum. So my guess is that Litecoin is probably going to be outperforming in the market in the coming weeks or months, trying to catch up to Ethereum in that correlation. It is seriously lagging at the moment, and it was even lagging even more so a few months back. But in recent weeks, it really started to pick up the pace, much like Cardano most recently. And we're probably going to see that from Litecoin again, to really start to pick up the pace and really try to make good on that lagging correlation and fully catch up to Ethereum. But it's not. Litecoin isn't only just lagging behind Ethereum, it's also lagging behind Bitcoin. And I mentioned the Bitcoin 4-year cycle. But Litecoin, interestingly, of course, is a copy of Bitcoin. It has lower transaction fees, and it's a faster cryptocurrency to send for your payments, for instance. It's a copy of Bitcoin, but it also has very similar price action to Bitcoin. The Bitcoin 4-year cycle is one thing, but Litecoin also has a 4-year cycle of its own. And if we just compare these 4-year cycles, you'll see how much Litecoin is lagging. And so this is an article that I shared on Brave New Coin, so you can definitely check it out if you want to read about the new Litecoin 4-year cycle. But essentially speaking, Litecoin is lagging behind Bitcoin. It is still very much in its candle 1. The most explosive exponential price action will most likely occur this year. So Litecoin just needs to break those final 4-year cycle resistances before enjoying new all-time highs and beyond. So that's an interesting point when it comes to Litecoin and its correlations to Ethereum, but also Bitcoin. But we're also seeing not only these U-shaped formations across altcoins, but we're also seeing double bottom reversal formations. And you can see one on Bitcoin Cash, for instance. You can also see one on Dash, but on Dash there's a more jagged double bottom. It's not picture perfect as Litecoin, for instance, when you compare Litecoin to Ethereum. But Dash has an interesting market cycle in of itself, that it has a parabola-like accumulation range across time if you set up the price chart on the logarithmic scale. And this is also something I shared to Brave New Coin, the Dash market cycle, where I talk about this parabola accumulation range, which is very, very similar to the parabola accumulation range that Doge has, Dogecoin. And Dogecoin, of course, has broken out from that parabola accumulation range, rallying thousands of percent. It's gone absolutely ballistic, as we know, in the past several weeks. And Dash has only just broken out from this parabola accumulation range. And historically speaking, this sort of breakout before, this breakout from the parabola accumulation range in 2017, roughly speaking, this preceded a new all-time high for Dash. So the fact that we're seeing yet another parabola accumulation range, which is around 800 days long, breaking out from this macro accumulation range, well, macro trends are always preceded by macro market structures. So whenever you see a parabola accumulation range forming for 800 days and then you see price break out from it, you're probably going to see a macro uptrend evolve, because long-term market structures precede long-term macro uptrends.
Yes, they certainly do. And yeah, look, lots to cover in there. A couple of things that spring to mind. You know, we've talked about Doge just briefly a couple of times, and of course, you know, Doge has a very famous and powerful and influential backer in Elon Musk. And I did see yesterday, I think there was some announcement that, and of course I have no doubt that this has been triggered by the interest of Elon Musk, you know, that some developers have jumped back on Doge, because Doge was effectively an abandoned chain for some time. But I believe there's some developers that are making some improvements and enhancements to the Doge blockchain at the moment, which is, yeah, an unexpected and fascinating development. So it'll be interesting to see how that plays out. And yeah, I imagine there'll be just, it's hard to see how Doge doesn't do well, just because of the power of memes and the power of Elon Musk. And you can't really fight gravity, even though that's exactly what he wants to do by going to Mars. Interesting. Now, what else did I want to say? Look, let's close this off. I guess, what would you say to new people who are entering the crypto markets now? Because I imagine there will be a lot of them. Some of them will be listening to what we're talking about here. You know, what's the best way to, I guess, dip your toes into the market? You know, and it's a funny one, because, you know, do you adopt a kind of a dollar cost average approach? Do you just dump a big sum of money in while you can, and then dollar cost average from there? Do you wait for a really big dip in the market? Yeah, what do you think?
Well, I think anybody who wants to enter the market and learn about crypto, they should do exactly that. Learn about crypto, learn about altcoins, learn about Bitcoin, because it's very tempting to invest in the cryptocurrency market, in Bitcoin, before not really knowing much about it. And this is where, you know, crypto Twitter is such a great resource for learning about the price action of different altcoins and Bitcoin, learning about market cycles, learning about these different recurring patterns. in the price charts. And this is exactly what I do in the Rekt Capital newsletter. It's actually a top 10 business newsletter on Substack as of today. I share cutting edge insights and objective, unbiased market analysis in that newsletter, sent straight to readers' inbox 3 times a week. And this is essentially a resource that I've developed for people just entering the market, because when I entered the market, you know, I relied heavily on crypto Twitter, but I always wanted to learn more. I wanted to understand these coins. I wanted to understand the research behind these coins. I wanted to understand how they tend to behave, just to gain an appreciation of different spheres in the market, whether that's fundamental analysis, whether that's market cycle analysis, whether that's any other cutting edge insights or analysis of different indicators and metrics. So that's why I created the Rekt Capital newsletter. And I also noticed when I first started, crypto Twitter was very, very hype-based. There was a lot of emotion on crypto Twitter, and there still is, to be fair. You always see euphoria and extreme panic when price drops, but it's always important to have a level-headed approach. Always try to analyze the price as you see it. Try to be unbiased and just to be a weatherman of sorts, that you can just talk about the price action as it is. If it's bearish, then I always try to share content about Bitcoin being bearish. If it's bullish, then by all means talk about Bitcoin being bullish. But it's really important to learn about the space before diving deep into it. But once you're in the space, really important to first of all start off with money you can afford to lose. So don't risk too much money in crypto, because there is a possibility that it could, of course, go however many X's towards the upside, but there is also a possibility that you could potentially lose that money. So it's really important that this is risk capital. And it's very important to also realize that risk capital can also, you're taking on risk, and part of that risk is associated with volatility. So you see price action go towards the upside and then towards the downside the next day, and there's a lot of volatility there. So be sensible in terms of how much money you want to dedicate to the crypto market, because at the same time, if you dedicate too much, that volatility will be really affecting you emotionally speaking, because we might think to ourselves that we're okay with this chunk of money and dedicating it to a Bitcoin position, to an Ethereum position, to a Litecoin position. And then once we're in the thick of the volatility, we're in a position, we're seeing the volatility, we're seeing price jump up and down, we actually have underestimated the emotional impact that volatility will have on us. And it's interesting because the more exposed you are financially to an asset, the more you're going to feel the volatility emotionally speaking. There's going to be more stress, more sleepless nights if you overexpose yourself towards the market. So definitely don't go all in, because going all in financially is also going all in emotionally, and that can be a roller coaster of a ride for two reasons. Price goes up, it's a very emotional time, especially when it drops down as well. So really important to also pay attention to some of the things you mentioned, Andy. Dollar cost averaging. Don't buy all at once. And of course, try to resist from FOMOing, because of course, when price is going up, many people are attracted to the green candle and just FOMOing. They feel the fear of missing out and they want to jump on the ride, but sometimes it's best to be patient, best to wait and wait for a retrace. And once that retrace happens, it's always a good idea to think about potentially allocating a bit of capital to buying on the retrace, and then waiting a few days. If price goes a bit lower, then dollar cost averaging that way. So you're essentially laddering your buy orders. And the reason they call it laddering is because each rung of the ladder is essentially a buy order here, a buy order at a lower price, and so on and so on. So it's always better to spread your buy orders and dollar cost average, because you're also spreading your risk. Because what if you buy Bitcoin at one price, and then price goes towards the downside, and then of course it might reverse towards the upside, but you miss out on that additional minus 15% that price went down, and you miss out on the opportunity to buy on a bit of a deeper retrace. So by not laddering your buy orders, by not dollar cost averaging, you're essentially not spreading your risk, and there's an opportunity cost to potentially missing out on a financial opportunity that always occurs on the bottom of a retrace. So those are some of the things that I'd mentioned. Don't FOMO, try to dollar cost average, only invest what you're willing to lose, and be very mindful of the emotional impact that your invested money can have, and try not to risk too much that you wouldn't be able to stomach any volatility or any undesirable price action, but also very desirable price action, because if Bitcoin goes very much towards the upside, then we might want to bet more, we might want to allocate more capital to that uptrend. And it's very important to be mindful of the psychology that the charts essentially instill in us, or at least trigger in us.
Yeah, great comments there, Rekt. Some nuggets of wisdom in there. And look, you're talking about the volatility and the emotional impact that this has on you. You can't really explain just how intense that is unless it is something that you've experienced for yourself by having skin in the game and by holding crypto positions, because man, it really can mess with your emotions. And you're exactly right. And I think we talked about that in depth on one of our earlier podcasts. So I will make sure that links to those earlier podcasts and indeed your articles on Brave New Coin are included in the show notes. But so some good advice in there. I won't call it advice because we're not really in the financial advice business, but if there's one piece of wisdom that I would add to that, it's try and have a little bit of Bitcoin as well. Don't just go chasing some obscure altcoin and pin all your hopes on that, because that is a very, very degen, risky way to play the crypto markets, and you really need to know what you're doing to try and win that game. So always have a little bit in Bitcoin, I reckon. Let's finish this off, Mr. Rekt. So I think we've covered most things today. As I say, links to all of those resources that we've talked about will be in the show notes, including the Rekt Capital newsletter, which I do recommend. I'm a subscriber to that. It's a great resource as well. Take us out. Let's finish this off. Where can people go to find you on Twitter, your various platforms? Closing thoughts. Take us out, Rekt.
Well, Andy, it's always a pleasure to come on here and talk with you on the crypto conversation. It's always a blast. Really interesting questions. So I can't wait to come back. Anybody who wants to find me, of course, you can find me on Twitter at Rekt Capital. You can also find me at YouTube at Rekt Capital. Feel free to check out the Rekt Capital newsletter on rektcapital.substack.com. And that's about it, really.
Fantastic. Always a pleasure. All the best, and I'm sure we'll talk again very soon. And bye for now. I really hope you did enjoy today's episode, and if you did, please do subscribe to the Crypto Conversation in whatever podcast app you are using. But for now, that is us. We are out of here. See you next time. See you real soon. This was the Crypto Conversation for Brave, a New Coin.